This is Rod Kusin and Spoomad for Risk 4, September 9th, 2014. The purpose of this video is to review why we said in our previous video of the same date that you could have anticipated the areas of support that we saw take place in the trading activity today if you had the right tools. So when the market first of all came down and found support at around 89.5 and then ran up and found resistance at around 1999.5, how could you have known that in advance? Well, there is a way. Many traders use market profile, and so do we. We may use a few tools that are unusual to some traders, and we're going to show you those now. The first is a composite market profile. The composite profile, illustrated here, shows the volume activity from a certain date to a certain date. So in this particular case, we're choosing the 22nd of July, and we want to see where the total volume activity occurs at any price from the 22nd of July through to yesterday, 9/8/2014. And here's what you find. You find the highest amount of profile here at 1998, and then lower areas of volume where there's a dip in the graph, and then again higher areas of volume where there is another peak. Now, how can you use this to anticipate where the market is going to go? Well, here's the way we do it. To some degree, this depends upon the trend. So if the trend is down, we're going to read this slightly differently than if we were reading it going up. Let's presume that the horizontal line represents the price activity of the Spoos. The market is moving down below the area of the point of control. As it moves down, generally speaking, it will drop to fill in an area of low support, but it will exceed that and start to move up into the area of higher support. Moves down to fill in an area of low support, moves through that up to an area of higher support, then down again, and up, down again, and up, then down, and up, and down, and up, and down, and up. Where does it stop? Now that's the trick. Although this is only a relative statement, because it obviously doesn't always happen this way. But generally speaking, this is what we observe. As the market moves down through an area of low volume and moves continually down through the area of next higher volume, it will typically stop right as it surpasses that area of higher volume. Now the converse is true when you're going the opposite way. So if we were to move down to this price of around 91, 92-ish, right in there, that low area of volume, it should exceed that and will probably stop just after it passes through this area of higher volume. If it manages to drop any further, then it's going to go through that price down to the area of lower volume, continue on down until it gets to the area of next higher volume, surpass that, and then probably stop. So if we continued this particular process, if it were to drop through this area of low support, which is a little hard to see because of the bars in the way, it's going to probably stop right after it exceeds that peak. And it's hard to tell right in here. Maybe right around here, it looks like. That's generally how this is going to go. Similarly, if it's moving up from an area of low volume, it'll seek out the area of the highest volume, or higher volume, I should say. And then before it drops off again, it'll stop. So it might stop right in there. And then if it goes any further, it'll move up to that point of control. It could very well just bounce right off of that. But if it breaks through, it's probably going to stop just after it surpasses that level of high support before it drops into the next area of low support. So depending on the direction that the market is moving, you're going to read this slightly differently. So I'm just looking at the chart. This is what I would anticipate would happen depending on what in fact occurs. That being, does the market move beyond an area of support through to an area of low support, or in other words, low volume? And if so, then what it should do is move up to that area of higher volume, surpass it, and then consider potentially stopping. So just by looking at this, my lines are going to be drawn at around 89.5, 83 1/4, 78 1/4, 78.5. Those would be where my lines would be drawn. What actually happened? The market moved down where? To 89.5. It moved up to where? Right in this area here. Where was that? 99.5. 99.5. Okay, we've got to round that to the nearest tick. And you can see it. You can see it right on this composite market profile. This is a beautiful piece of information. When the market dropped again, okay, look at where we were at. All right, 99.5. Where's this going to find potentially some support? It's moving down. Okay, so according to the graph, if it moves down into this range here, it will probably move through the area of low support and then stop right at around 94 3/4, just below 95, gain a little bit of support there before it continues on down. It's going to find the same situation back at around 89.5, but then if it gets below that, it's going to find that support at around 83 1/4. What actually took place? When the market dropped, the first area where it really, well, it didn't spend a lot of time in here. Okay, it didn't spend a lot of time. It dropped right through that area of 95. Yeah, nothing at all took place there. Found a little bit of buying at around 89, right where it was at the early morning low. That was almost to be expected. But when it continued to drop, it didn't really see any buying at all to speak of. A little bit right there, 80. Where's that number? 85 3/4. We'll come back. We'll look at the chart and see where 85 3/4 shows up, and then again at 83 1/4, right there. Okay. Look back at the chart. The area of low support. Area of low support was right down there, 85. A little bit of buying there. But as we say, it usually goes beyond that. And where does it stop? 83 1/4. You can see it, okay? You can see that. And even if we changed, and we're going to do that. We're just going to go ahead and we're going to change the last date on the chart so you can see that this graph doesn't change. Okay? I'm going to change the last date from the 9th. We're going to take it back to the 5th. No, let's get it back to take it all the way back to the 4th. All right. Slight glitch, hang on. Okay, what I actually did, for some reason TradeStation wasn't allowing me to go to the dates that I was looking for. I went back to the 29th of August. So it's only looking at the profile from the 22nd of July through the 29th of August. And where do you see these numbers? Okay. That area, 83.25, is still right there. It's in the same place it was before. So what does that tell you? Okay. The charts will change based upon how much activity is occurring at or around those prices. But the volume is still going to be the same. The chart isn't going to change unless you've got activity at that price. So this number of 83.25 has been sitting there for days on end, really for weeks on end. Because the last time we were anywhere near that price was right in here, and that is around the 23rd, 24th of August. And there's your volume. It's right there. So this kind of information is very, very useful. You just have to consult it. The same applies to the Dow. Now we can look at the Dow in the same way that we look at the Spoos, and we're going to watch it because when the Dow begins to find support, regardless of where the Spoos are, it's going to have an impact. The Dow's support and resistance level will impact the Spoos. Now I'm going to move this back to our current date before we continue. And now let's go back and look at the Dow. The Dow dropped. This morning it dropped and found a bit of support briefly at around 43. Not much at all, really. And we had a little bit of a move there, but it wasn't much of anything. First time you have any real kind of support is right in the area of 17,035, 17,036, right in that area. Second time at around 09, and then all the way down to, this takes us down to 17,009.63, and then all of a sudden it shoots up. Why? Okay, why are those three numbers of any particular significance? Again, 35, right at around 10, but more importantly, right at around 09. Let's get it back there. Where did it go? Can't get my... we saw it earlier. It's there. There it is. 1709.63. 17,009. Look at the composite. Market is moving down. So you see how the stair-step approach shows up here? The first area before it drops is right at around 17,059. And again, 17,049. Then again, right there, 17,034-ish. You can see it right there. I can't change this chart. This is the way it appeared and has appeared for several days. So it's right there for everybody to see. And then, look at it down here. See where it really drops off? It's going to come down here, hesitate. And let's get that, line that up. Okay, right around there. 1709, just below 1710. And then just maybe one tick below that, well, not one tick, but just a slightly below that, right in this level right here. Right there. Okay. So that lines up with 1709 and change before it drops. Where did you see the drops take place today? Okay. Let's go right back. Take a look. You can see for yourself. Right there. But remember, after it rallied up, okay, it met with some resistance in here at just below, just at about 17,060. Where does that show up on the chart? We're moving up, okay, right here, okay, in this peak, right in there. And if it managed to get past this much, where's it going to stop? Okay, is it going to fill in these areas of low support? It might, but it might stop right in here before it gets to the area of low support. But if it gets through there, then it might stop there. Maybe there. Okay? So your first place where it's liable to really think about stopping is just above 17,063. Take a look at the chart here. Stops it. Okay, this is a, let me make sure this isn't, okay, that's a lower high. This was at 1760, okay. There we go. She takes it all the way up. Let me get my cursor here. To right in here at 17,086. I think that was at 83. Yeah. So 86 is as far as she goes. 86 and change. Where does that show up on the chart? Breaks through there. Breaks through here. Comes up to 80, 82, 84, all right, it stops right in around here at 86 before it gets to that next area. Now, frankly, I would have expected this to go a little bit higher, just based on what I see of the chart. Okay. Of course, this chart is taking into consideration the activity from today. I suppose we ought to eliminate that from the chart to be truthful about what it looks like. Let me see if I can do that. Okay, so according to the chart there, it stops at 83. Continues on up just a little bit higher before it peters out. So in this particular case, it does seem to not quite meet what we would expect. It comes up to this area and doesn't manage to go any further to the point where it surpasses the area of higher support and stops before it begins to drop. So it doesn't follow the rule here. We get a little hesitation right around 83, and it doesn't get much higher. So likely, okay, this is because the Spoos have hit its area of support, or pardon me, resistance really, as they have now surpassed that area of the point of control, and the Spoos don't want to go any further down into areas of lower volume. So they play against each other. But you want to look at them both to get a good idea of what to anticipate. And that's what we do. We look at them both. On our primary trading chart, and I've just created this so that you can see all of what we have. We've got the composite market profile here on the Dow. It's over here. So both the Spoos as well as the Dow are showing up along with all of our other indicators. So we can keep an eye on all of this in one chart if we want to. Now, some of our traders don't want to have that much information that they want to look at any one point in time, and that's fine. Depending on how many screens you've got, you can do this any way you wish. But you can have it all on one screen, or at least on one monitor, if you choose to do so. But the whole point of this video was just to point out that there's critical information that can be gleaned by looking at these composite profiles. We can help you to obtain that kind of information. Just give us a call, and we'll be happy to have a chat with you and give you a full-fledged demo on how we do what we do. There is no better business in the world than trading the Spoos, but you got to have the tools to do it correctly, and you need to have training. You can finally learn this on your own if you want to take a couple of decades to do it, but there's a faster way, and it won't cost you that much. But you'll stand to gain a lot by coming and learning from what we have to teach. So go to RSKsys.com, take a look at some of the videos that we have there. We'll review the process that we use, and then come ask for a demo and consider coming on board with us. You'll be glad you did. This is Rod Kusin and Spooman for Risk.